Here we go from the undisclosed, now disclosed location.
That's right. From over here in beautiful Mallorca.
Oh, my Mallorca.
With a J over here in Spain, Pete.
Sounds like a muscle in your back that you might pull. God, I pulled my Mallorca. Shit.
I think I pulled my Mallorca. Welcome to the Rebel's Edge, folks. August 8th, 2023. He's Pete Najarian. I am John Najarian. And Jared is, as usual, handling the clock, the graphics, the dancing bull, or in this case, the bear kicking the bull's butt, because we're witnessing about let's see, Pete, we're still at nearly a 300-point decline off the bottom. That's what they always say when we're, just look, a spring. The question is, was it the plunge protection team that stopped us, Pete? Because we were heading south in a big hurry.
Yeah.
I think we had some good reasons for it. How about you?
Yeah, I think it looked pretty ugly. And we might return there, John. I mean, we're only halfway through the day, so, who knows? But we have bounced at least off the lows, down over 400 points. So I guess we'll hang our hat on that for now, and then we'll see what transpires in the second half of the day. It's going to be interesting for sure. Volumes, John, on Friday were off the charts. Yesterday, even with that huge move, the volumes actually were a little bit tempered down a little bit. So maybe that's even just a sign that people were kind of like holding back and waiting and waiting for something. And we got plenty of somethings today that's moving the market.
Yeah. And I'll tell you, Pete, we start out, folks, every day with the macro minute. We try not to hit much more than a minute on macro. And Pete, today I'm going to hit that one of my favorite deals is over. And that is S&P Global has stopped handing out scores to corporate borrowers on ESG criteria, which means that Target and Budweiser and a bunch of the posers that pretended to be really supportive of certain causes in order to get a higher ESG score, Pete, they ended up offending both sides, the side that they sought to get some approval from and people who were not approving of that. And now S&P Global says, you know what? We're done with that.
Well, I agree with you. And that part's pretty daggone interesting. And there's a whole lot more than just the few names that you brought up. I'm going to bring up the credit card indebtedness, John. I mean, we added $45 billion to it, right? April and June, which now puts us at a new record high, not one that we are proud of, $17 trillion in total household debt. I mean, you want to talk about getting ugly and getting ugly in a hurry. I mean, the delinquency rate is at the same growth as the use of cards right now, credit cards, which credit cards themselves went over 1 trillion. And then all of a sudden you get the total household at 17 trillion. At some point, John, you and I brought it up before, and we're bringing it up again. Sometime that comes to roost. And I don't know when, but it's getting pretty ugly.
Yeah. That was a good reason that we were down 400 on that, Pete.
Yeah.
That and China. And in fact, on our fantastic futures.
Fantastic futures.
I'm going to say, Pete, that was partly, we've got the dollar and a number of other currencies around the world. China's exports plunged by almost 15% in July. That's against a year earlier. And they stayed shut down, as many of you will recall, until perhaps February or so of this year, Pete. Maybe it was March. That was bad for China. And a lot of people found other sources for what they needed because they couldn't count on China. And the Chinese Communist Party, they're in a world of hurt right now.
Yeah. For my fantastic future, we finally dipped for the first time in August, John. We actually got underneath 4%. That didn't last very long because right now we're back over 4% on the 10-year. So when you're looking at these treasuries and we talk about the futures and we talk about where do you trade these, CME, there's a lot of different things you could do. But it's interesting, John. It's still sticky up here at 4. It took a long time to get there. And now it's sticky holding up. And even though we dipped today, first time of, like I say, since August, and we're in early August. It's only the 8th, but still, nonetheless, it's hanging in there and hanging right there just above 4 right now. Still down 1.5% for the day, but nonetheless holding up at 4%.
Yeah, and as you correctly pointed out, Pete, whenever we're over 4, the NASDAQ struggles the most of the big 3. And if you want to put all 4 and count the Russell in there, the NASDAQ struggles the hardest when we get over 4 and stay over 4. If we don't break this fever pretty soon, Pete, it'll be a base instead of resistance to the upside, which it had been for most of the last 6 months.
Yeah.
All right. Let's now explore some of the big movers today, Pete. Chegg. This is one that you and I both laughed at when they kind of laughed at AI. And everybody said, I think this might hurt you guys a little bit. When they announced that they were doing a deal, Pete, with Scale AI, all of a sudden the stock took off. It was off to the races. It was up over 24%. It has sold off to single-digit gain now. That's a pretty big sell-off. It's still a gain, but it's pretty big sell-off.
Yeah, and it's a heck of a lot closer, John, to the 52-week lows than 52-week highs, which, you'd expect to see this thing based on how it started out. We thought, hey, man, we're finally off to the races. This thing's going to start flying to the upside. That kind of stopped pretty quick. Morgan Stanley did raise their price target, though, John, to 13. Stock last I looked was somewhere between $9 and $10. Not sure where it is right this second, but nonetheless, their price target, they raised by $1. They got up to 13. But, the realignment with AI and that whole storyline, as good as that has worked for many of these companies to just throw out those 2 letters, it didn't last very long today for Chegg. And we'll see how this goes into the future. But I'm not in a big hurry to start chasing this thing anyway, John.
No, I mean, what they do is they help students that are studying with everything from textbooks to tests and all this kind of stuff. And I think, Pete, that it's a situation where AI definitely can do what they do. And if AI takes over, Chegg, they could lay off a lot of people, but what do you need Chegg for is the big question at that point.
Yeah.
All right. Now let's take a look at Beyond Meat, because it's beyond disappointing and beyond horrible. Not just the taste. I'm not just referring to the taste. I'm referring to their outlook, Pete. They basically said they do not expect positive cash flow in the second half. This is not a new company. So like Pete always says, if you're a brand new company and you're just breaking into, towards profitability, okay, that's one thing if you're 3 or 4 years down the line. If you've already been around for those 3 or 4 years and people just are saying, you know what, this meat doesn't taste like meat. And they said promotional programs are not scaling well. And if any of you have priced it, it is not price competitive with beef or pork or chicken. So, there's that as well, Pete.
That and the fact that they got to put so damn much sodium on there, John, that you damn near can have a heart attack as soon as you bite into whatever it is, whatever fake meat that it is. So there's a lot of different issues. But when you talk about just the fundamentals of the company itself, 33% short. Now, in this particular case, and we talk about this all the time about, well, it's a short squeeze, it's this, that, and the other. There are reasons why some of these companies have significant amounts of short interest in their stock. And this is one of them, because there's a heck of a lot of folks out there that realize that they are not believers in what's going on for Beyond Meat. And 33% short sort of signals a big signal, John. And they've been right. You and I both remember this stock when it was like $100 stock or something like that, maybe even higher than that. And it's just been getting pounded to the downside. Today, 20% to the downside? It's right above 52-week lows. Last I looked, it was trading 12. I think the 52-week low close to 10. So it's just had a really rough day and a rough year, and it's been a rough ride for this company, and they cannot seem to be able to figure out, John, how to make that money, that free cash flow that you were just talking about. Without that, and that was something they had planned on, that is an issue.
Yeah, no doubt. I'm going to slide over just a bit, Pete, just because I see how Jared's looking at me, and I know that the
this is called on the move,
Yeah, I had to do it on the move. Sorry, Jared. Basically, the sun all of a sudden was shifting too far over this way, Pete. But let's talk.
While we iron that out, maybe I'll just jump in here, Jared, just so you know. Hims, hers, and health. Now, Hims and hers, let me tell you something. They do a heck of a lot of different stuff, and it's amazing what they've done. They've paused on something that a lot of people, have gotten very excited about when they're talking about the weight loss management and that whole process and that whole thing. And they paused on that. They were expecting it by the end of the year. Maybe it's gotten pushed out a little bit. But there aren't too many companies out there that actually can put 82% year over year revenue growth. I mean, that is a monstrous number and absolutely incredible. Yes, they have high short interest. They got a strong balance sheet, though. And this is a company that they're waiting for the right time to launch what they're doing in the management of weight and weight loss. And they were talking about it, and they were very straightforward. They were going right at this one. How about this quote, Jared? He said, you don't want to have an, what is it? The Ozempic face. And that means you've got this droopy face and this, that, and the other. And that's something that's a major issue as well. So that, I think, alone. But when you look at that revenue growth, that's why the stock is up 17%. That's why it's pushing near 52-week highs. And it's had a really, really nice run today post-earnings.
Yep, it sure has. And it's one of the big winners today, double-digit winner. Mm-hmm. Now, the next one's not a winner at all, and it's International Flavors and Fragrances, or IFF. Yeah. They reported 88 cents versus $1.10, Pete. That ain't good. Revenue underestimates. That ain't good. And then they cut their outlook going forward. So that's that triple play that you don't want to be any part of if you're a shareholder. And certainly it's tough for the CEO to stand up at the podium and sort of deliver those numbers.
Well, and when you lower your full year sales numbers on top of all the other numbers you just brought out, John, I mean, there's not an area where this was a good call. There's a really good reason why this thing's at a 52-week low today. Now, it hit and established a 52-week low. It did bounce off of that a little bit, but it got all the way down to $62 today. And last I looked, it was maybe 65, but it was down maybe 17%. This thing is getting absolutely hammered. And to your point, when you give that outlook, and we talk about this with earnings specifically all the time, when the outlook comes out and that outlook is anything but great, they're going to start selling. And that's exactly what we saw today. But this selling didn't just start today. This selling's been going on for a while now. And the problem is, they just are in the wrong spot right now for customers because customers are pulling back and they're not as interested in trying to keep themselves in that sort of a fragrance world. People are willing to say, you know what? I'm just going to soap up and walk off because I don't need it.
Margin shrunk pretty dramatically, Pete. Yeah. When you've got a 21% margin, okay, that's pretty damn good. 17 would be good if you had 15 previously. But if you had 21% year over year and all of a sudden you're looking at 17, it's not so good.
No,
that's like both hands out like this. All right. What do you got as far as sports, Pete?
Gangrene. Let me tell you something. We talked about this. We've been introducing this and everything else. But, John, tonight is the night. Hard Knocks kicks it off. If you're a sports fan at all, you don't even have to like football. You're going to like Hard Knocks if you've never seen it. It's been around now for, quite a few years. As a matter of fact, this is at least the second time the Jets have been a part of this whole thing. And in their previous time, John, they actually got all the way. Now, a lot of people say, well, it's going to disrupt everything. It's going to do this and going to do that. I'm one of them who says that. But the numbers actually show something a little bit different. When you look at the last 6 or 7 teams that have been focused on, John, they actually had an improvement of how many games they won the year that Hard Knocks came in from the previous year. And you look at the Jets, they went all the way to the AFC Championship game before they got knocked out. So there's a lot of reasons that I think people shouldn't be looking too far forward and saying, you know what, these guys are destined for something bad. Aaron Rodgers, number one, that's going to make this thing tonight at 10 p.m. Eastern time. People are going to be watching that, John. And why are they going to be watching so intently? Well, because of the fact that it's Aaron Rodgers. He's a 4-time, league MVP, Super Bowl champion, basically one of the greatest quarterbacks maybe ever in the game. And now here he is with the Jets. He's got a great receiving core. He's got a great offensive line, really good tight end, great defense, absolutely off the charts, great defense. This could be a lot of fun to watch. And I tell you what, I think that even though they're in a tough division, I don't know. I think at least maybe 3 of these teams make it to the playoffs from this division just because they're that good this year.
Pete, it should be good for HBO because Warner Brothers Discovery, of course, WBD is the symbol, folks. It's $13 stock. It's down today. Well, they haven't had a show on yet for this. So like Pete says, if this ends up being a very popular show, and I got to believe for a lot of us that are football fans, it will be. And then for a lot of people who are into intrigue and all of that, I think this could be a real winner for him, Pete. Some of the hard knocks in the past, even with, relatively no-name players on the teams, this one's chock full of stars.
Yeah.
So I think people will be talking about this on ESPN virtually every night, every day after this thing airs. And I got to believe that this is good for WBD. So I'm sort of tempted to buy it on the dip here.
Well, there's no doubt there's going to be clips and there's going to be quotes and there's going to be a lot coming out. And it's not just Aaron Rodgers. That's what everybody's expecting. We already know that. But there's a lot of players who like to talk in the league, John. You and I both know that. We were both there. I mean, there's guys in the secondary that maybe you haven't heard of that you're going to know them by name the rest of the year that are unbelievable, including that big, long, lean cornerback that they got last year, probably one of the best in the game. There's a lot of guys talking, and there'll be a lot of fun in front of the camera. So I'm really looking forward to it tonight. I can tell you that. I love the quarterback series, and this is just another kind of version of this inside the locker room, at least for the first 5 weeks. And then all of a sudden, once the games start, then Hard Knocks is done. But then they sometimes will rotate to a college team. Or like last year, they did the Arizona Cardinals for the rest of the year. So there's a lot of stuff that goes on, and I think HBO is really onto something here. John, how about the Pac-4? Now, you and I both used to know it as the Pac-8, the Pac-10, the Pac-12, and we've talked about this already, but I think that there's an answer for how can this thing maybe survive, and probably won't survive as the Pac anything unless they go to the Mountain West, those last, couple of teams, those last 4, Cal, Stanford, Oregon State, and Washington State, and they do something with the Mountain West teams. Maybe. And maybe they change and leave the name. Maybe they go to the Pac-12. Maybe they go to whatever they do. But I think the likelihood of them, and it sounds crazy at first, but hear me out on this. The ACC wants them. They want just 2 of them, Cal and Stanford. And you can understand to some degree why. The academics of both those schools, probably maybe one of the best public schools academically in the country, private schools in the country. You've got them both with Cal and Stanford. And that brings a little bit of cachet, I think. It also gives you that reach to both sides of the country, which is what the Big Ten has been able to accomplish as well with all the different things that they've done. But if they do that, John, the ACC, and if they can hold on to Florida State, and of course, obviously, you need to take care of Clemson and some of the North Carolina and some of these other teams, but it really could be pretty interesting. Do you think that's a possibility at all, or is that just a crazy long shot by the ACC to maybe grab these 2 teams? Because they're in talks, but they don't have anything. It's just preliminary right now.
Well, they've stripped off certainly the cream of that crop, Pete. USC, UCLA, those are big name powerhouse teams that have gone up and down in the past decade. But Oregon has just been near the top 10 or 15 probably for almost 20 years. Oregon's been that good. Washington, it depends on the coach. The Huskies, it depends on, a lot of things as far as how Washington plays. But you've also got Utah. That's, remember, that's where Urban Meyer was coaching before he went over to Ohio State and all the rest of this, Pete. He was like the big dog over at Utah. And so I think the Mountain West would not be a horrible, obviously it's a step down. We both know that. I don't know that you want to fly your athletes across the country every week.
Yeah.
You know, and literally if they're in the ACC, Atlantic Coast Conference, they're going to do that. And I think that that's a losing proposition for them, even if Stanford on a good year could beat a lot of ACC teams, and Cal's kind of, hit or miss. But I just don't think that that's a real viable possibility for very long. And I think that the commissioner of the Pac-12 should be fired. First of all, what do you need a commissioner for with 4 teams?
Yeah. Well, he's done a magnificent job of doing everything wrong. I mean, you can do some stuff or all. He did all. He picked all. Although I will say this, Penn State's going to have to travel to USC or UCLA. Penn State's going to have to go to Oregon or Washington. So is Maryland. So there are teams at Rutgers. There are teams in the Big Ten that are going to have to do these flights, very similar to what could happen with the ACC. I'm not as worried about that. But, I think the one thing, too, that we have to remember is, what about Notre Dame? At some point, does Notre Dame finally have to say, all right, this independence has been great for all this time, and we have our own TV contract, the Notre Dame network on NBC. But at some point, John, if Notre Dame, and they're already kind of in bed with the ACC, sort of, that could be interesting if they could coerce them in there. Because then I think Cal and Stanford, along with Notre Dame, that makes for a really nice catch for the ACC if they can hold on to Florida State and Clemson and some of those schools.
Yeah, I mean, this is such a moving target right now, folks. Again, Utah going from the Western Athletic Conference to the Mountain West to the Pac-12, and now to the Big 12. There's just a lot going on right now with people moving almost every year.
Yeah.
So I think this is going to be something that will really stress out a lot of the athletes too, Pete, because you and I know that athletes don't like committing if the coach is in flux and or if your conference is in flux. I mean, I know it's not commitment season right now, but if they don't get this thing straightened around, would you commit to a Cal? Stanford and Cal both have great academics. We both know that. But if you're there to be a student athlete and you can handle both the Division I playing and be a student in the school, I don't know that you commit to this. I mean, there's Texas, which is a great academic and athletic program, Michigan, Minnesota. I mean, there are a lot that can offer you both. Why would you commit to a place that just lost, 60, 70% of the people who were in that conference?
Mm-hmm. Yeah, it
And
makes it
means
interesting.
money. That means money too, because the kids get paid based on the NIL, the name, image, and likeness contracts that they're signing. If you're somewhere like the Pac-4, you're getting crap for NIL money, Pete.
Yeah,
right?
yeah.
Because you're not going to be on TV. What? Who are they playing even?
Well, it's going to be really interesting. I'll tell you what, it is a daily changing thing, which makes it sort of interesting, very topical, very, the creativity of what these guys are doing is interesting for sure. Could it blow up in their face? I absolutely think it could. And if these super conferences, if you're not playing just a handful of the guys in your own conference, I mean, it's really changing the landscape of college athletics. There's no doubt.
Yep. And as always, Pete and I like to follow the money. So keep an eye on that, folks. Watch where that money's going, because these teams will be drawn by the money.
Yeah.
All right. Thank you for joining us, folks. We appreciate it. We hope you share the Rebel's Edge with your friends. Remember, we're on thestreet.com. We are on YouTube. We are on marketrebellion.com/edge. We're broadcasting on Spotify and a whole bunch of other areas. So make sure you share it with your friends, and make sure you tune in again tomorrow, 1 p.m. Eastern Time.